Quiet. Hello, hello, hello. Come on in, come on in, come on in. I'm gonna lock my dog outside. Happy Tax Tip Tuesday. Come on in, come on in, come on in. I'll give it about 20 more seconds. Hello, hello, hello. I put my event in the chat, TLJ Intensify Her. I would love for y'all to join me. I would love to, hey, to if you in the Bay, come on in. Happy Tax Tip Tuesday. I am Tracy L. Tate. I am the CEO of TLJ Professional Services, where we are about all things financial. I bring to you almost 40 years experience in bookkeeping and accounting, as well as taxes, the masters in business and accounting, as well as public administration. So for the past few weeks, I've been talking about the 10 deductions that's overlooked by small businesses. Today, we're going to talk about bad debt and more or less write-offs, right? Because what is bad debt? Bad debt is uncollectible. It's very common in accrual base. So some businesses, when a AR account, so accounts receivable account, a customer has not paid their bill, outstanding balance, within 60 to 90 days, they will deem it uncollectible, therefore becomes a bad debt. A lot of times these debts get sold to collection agencies, to other collection companies, where they try to collect and recover anything. So basically, they pay pennies on the dollar because the company write it off anyway, less whatever they get from that agency that buys it, right? Buys the debt. But a bad debt is any income, revenue that you will not collect from a customer for services or products already produced, received, or sent, or services provided. Okay, so you have to have already provided the service, you have to have already delivered the goods for it to be considered a bad debt. Otherwise, it's an incomplete transaction, right? So look at it from a standpoint of, I did a service or I provided a product for this person. I gave them a net 30 term. They still haven't paid me. Here we are 90 days later. If you don't have a formal collection department, then a lot of times those debts get written off, even if you do have a formal collection department. But a lot of companies do not go past like 120 days for sure. They report, of course, to the creditors, but they consider it not collectible. Now, if they do end up recovering that bad debt, then they re-recognize the revenue, okay? So you can also write off, or it's also considered like a bad debt, it's actually called waste, if you have perishables or things that spoil or rot or go bad, or even if it's not that they go bad or spoil, whatever, if you have products that get damaged, let's say in weather, right? Things like that. All of those are considered a write-off. It's not called a bad debt because it's not debt, but it is waste that you write off. So bad debt is if you have accounts receivable or outstanding invoice that a customer still need to pay you for. You could choose to write it off, or like me, I save it on my books, okay? If I need to write down or reduce my taxable income or my net profit to reduce my taxable income, then I may write off some. Okay, so it's strategic. You could use it strategically. There is no rule to say that you have to write it off after 30 days, 60 days, 90 days, or even 120. You don't have to write it off at all. But you should create a policy and procedure for your company. You define what that looks like. How long do you want a debt to stay outstanding before you consider it uncollectible and therefore want to write it off and get that tax deduction? Okay. So that's a policy that you need to create for your own company. There is no one size fits all. So you can use it strategically. Now, again, if you end up writing off an expense and then or write it off as an expense and then you recover it, you have to recognize the income as well. Okay, because it's a recovered debt, and it is taxable income. So that's wonderful. So along that same line, right? So like I was talking about perishables and waste. These are items that you pay for, you expected to make money off of, and you cannot because they went bad or they got damaged, or even if they got stolen, right? Anytime that you're supposed to have revenue from a product, it doesn't really happen in service, but it can. Not waste anyway, but from a product, whether it's for a restaurant business, whether it's for flower shop, right? Any business where you have cost of goods sold, if you paid for items to make revenue from, and those items no longer can produce revenue for you, you get to write those off as waste. Okay. Because it affected your profits. You do get to write that off. It's a loss in essence. So today, that's one that people definitely forget to do, especially in the restaurant industry. I've worked with a couple of restaurants now that when I ask them that question, well, what do you do about your waste? It's like deer in the headlights, right? Like, what am I talking about? As long as you have cost of goods sold, you may have some write-offs when it comes to like I said, whether it's damaged, whether it's spoiled, whether it expired, things like that. All of those things can be written off. Okay. You want to know that, and you want to keep track of that. You also want to be able to show that that's what you've done, that you've, kind of disposed of it. So the main thing would be keeping the purchase date and recognizing when you disposed it, because some things is common sense, like lettuce, it's going to wilt within 30 days. I know there's some stuff going around TikTok that you could do certain stuff to fruit and they last that much longer and all that. I don't know who really do that, but either way it go, whenever and if ever it spoils, you write it off. Okay. So it doesn't have to be the restaurant industry again. So I'm working with a florist as well, and plants could die, right? Because of the changing weather conditions. Like California right now, we've had every seasonal weather, like in the last week alone, that there can be. So that's not good for crops. It's not good for livestock. It's not good for plants. None of that. So anything that becomes uncollectible, you can write it off. I have a dog breeding client. A couple of her pups, well, she had a female dog that gave birth to like 6 litter, and 4 of the pups passed. That is a loss that she gets to write off the value of what that dog would have brought for her, right? Because it's part of her business. Her dogs are like a cost of goods sold almost, right? They're assets, but because she used them to produce and reproduce, right? The ones that pass won't be able to reproduce. So it stopped a whole generation of additional pets, right? So she gets to write that off, especially the cost to dispose of them, but it's real tricky, and you want to be able to, in case of audit, be able to prove that you had a loss, okay? Because some things, like I said, could be common sense, like you bought lettuce, you prove you bought lettuce because you have the receipt, and then you're saying the lettuce wilted, okay? They're not going to challenge that, right? Because it's letters, it's common, it's going to go bad, right? Um, but you always want to consider yourself and put your mindset in a frame where you stay audit ready. Okay. That's how I conduct business. I conduct business to be audit ready. Will they audit? I don't know. Auditing is almost like it's not if it's going to happen, it's when they get to you, if they get to you, right? But it's not oh, you have to really do something to be audited. That's not really how auditing works. They can randomly select you based on any change you have in your tax return, or no change at all, right? Like your stuff has not changed in years. That looks fishy, right? So keep that in mind. So bad debt, waste, those are things that you could write off in your industry if you spent money to make money and it does not end up being able to make you money, then you could write it off. Okay. So I always like to recap this one. I mean, it's waste. I mean, how many more ways do I need to say write it off, right? If you're not sure, ask your accountant, include it in your financials, and then they'll let you know whether or not it's something that they can account for, right? If you're not sure, but you can definitely write off anything that became perishable, anything that you no longer have access to produce revenues from, and you bought it as cost of goods sold. So it's inventory, right? And that inventory will not be able to be used. So I always recap, I am Tracy L. Tate. I am the CEO of TLJ Professional Services. We are about all things financial, and we've been talking about 10 deductions that people forget to include, small businesses forget to include. So week one, I went over all 10 as a summary. We went over home office deductions, startup expenses, business use of card, professional services and subscriptions. Travel expenses were last week, and today we're doing bad debts and waste, right? Things you could write off because you can no longer take or have money from it. Next week, we'll be talking about continuing education and what that looks like, okay? Because that's one that people always forget about, including licenses, right? License fees, because they're random. Like, well, let me rephrase that. It's not every year that you have to renew your license in a lot of cases. So when you do have to do it, they may use any card and may forget, oh, this is a business expense. That's one example. But you always want to keep track. The key to passing an audit is having your receipts, having your documentation, having it noted, right? Details. The more detail oriented you are, the more likely you'll pass an audit, because they'll see how organized you are. And even if you're missing something, they'll see it as, okay, it could be a fluke, because remember, receipts fade. Especially if you fold them, they fade and decrease. Different providers of services that ring up, they have different ad tapes, right? Some of them don't last at all. Some of them last for years where you continue to read them, but you can't tell a vendor they have to use a certain ad tape, right? So you have to do your own due diligence when it comes to your receipts and stuff like that. Now, if you are in an audit and you don't have a receipt, if you pay for it by card, that's why I never pay for business with cash. Okay, never pay for business with cash, because as long as you use a card, there's a trail, right? It's a transaction number that follows that. So with that, you're able to go back to that merchant and request a copy of that particular receipt number. Okay, they have a way of doing it. It's through their merchant. They can look it up. They can reprint your receipt, things like that. Statute of limitations, I mean, how long they keep theirs. Always recommend keeping copies of things for 7 to 10 years. IRS has 3 years to really come after you unless it's fraud, right? There is no statute of limitations to fraud. So 3 to 7 years is like a cushion. You may or may not be able to get information. So you do your own due diligence. Take a picture of it, email it to yourself, create a file, invest in Dropbox so that when you take pictures of receipts, they go in your Dropbox. There's plenty of ways that you can ensure that you are audit ready. Okay, so with this topic about bad debt, you want a documentation that it was uncollectible for X amount of time. Therefore, it's your policy, right? You don't want to fly by night it like, oh, this person get 90 days, this person get 20 days, this one get 30. No, you want to put it as a policy and stick to your own policy. Okay, because with that policy, that's what they'll look for in your audit. Did you follow your policy? Okay, and that would pass an audit. With the write-offs or the waste, same thing. You just want to document what it is, how you disposed of it, and depending on what type of business you are, you may be working with somebody that come and do disposals, right? So depending on what the disposed item is, depending on your line of business, you may have someone that can provide you the proof, okay, depending on who you're doing business with. So keep that in mind. So we've gone over 6 of the tips now. So we got 4 more. I did put in the chat, we are having an in-person event for women business owners. It's for business owners. However, I'm kind of looking at it like, you know what? It's a women's empowerment event, okay? Business networking, but it is a women empowerment event. It's in Oakland, September 30th. You could get your tickets at TLJintensifyher.com. It's $100 off right now, no matter which ticket you get. Even if you want to do sponsorship, so we have different levels for sponsorship as well as a vendor. It's $100 off today only because it was a Labor Day sale. It started yesterday. It will end at 11:30 tonight. So take advantage of it. If you're in the San Francisco Bay Area or will be on September 30th, I invite you to come over. I know how to throw a party, number one. We're going to have fun. We're going to have some raffles, some gifts. We're going to have food if you choose to be VIP. So the VIP comes with the VIP brunch as well as VIP happy hour. Okay. So we're going to feed you and make sure you are feeling bubbly at the end and you're connecting with industry leaders as well as like-minded business individuals, like-minded women. Okay. So it's a women's empowerment event / business workshop. Okay. So we're going to work on your business, get your business together, get your tickets today. It's $100 off any of the tickets, any of the level of sponsorships and or the vendor fee. So take advantage of it. Time is of essence because time is not waiting on nobody. So I look forward to and hope to see you in the room. So I am Tracy L. Tate. I am the CEO of TLJ Professional Services. This has been a happy Tax Tip Tuesday about bad debt and waste. And I hope you took your notes and replay, #replay. If you're looking at this on replay, like, share, and forward to your business besties, especially about Intensify Her. So TLJintensifyher.com. Get your tickets today. $100 off any of the tickets, sponsorship, or vendor fee today only to 11:30 p.m. It's a Labor Day special that carried over till today. So you guys have a blessed week, and I will see you next Tax Tip Tuesday. Be blessed.